Crypto or real estate? In 2025, both promise big returns. But which one truly deserves your investment right now? Crypto offers high-risk, high-reward potential with cutting-edge tech and global access, while real estate brings stability, cash flow, and long-term value. In this video, we'll break down the pros, cons, and current trends so you can make the smartest move with your money. Let's settle the debate. Crypto versus real estate. Where should you invest now? Today, we will talk about crypto versus real estate. Where should you invest now? So before we start, make sure to hit the like button and subscribe to my channel. 1. Overview of both markets. In 2025, both cryptocurrency and real estate remain top investment avenues, but they serve very different investor profiles. Real estate is traditionally seen as a stable, tangible asset, ideal for those seeking consistent returns, inflation hedging, and long-term growth. On the other hand, cryptocurrency is a high-risk, high-reward digital asset class that appeals to investors seeking exponential growth and decentralization. Real estate values have appreciated steadily due to limited supply and increasing rental demand, while crypto markets, though recovering from past volatility, are gaining maturity with new regulation and institutional involvement. The key is understanding how each fits your risk tolerance, liquidity needs, and investment horizon. Real estate requires larger upfront capital and is illiquid, whereas crypto allows micro-investing with 24/7 liquidity. Choosing between them or balancing both depends on whether you prioritize stability and cash flow or growth and innovation. 2. Return potential. Stability versus volatility. Real estate generally offers predictable returns through rental income, 3% 8% annually, and long-term appreciation around 4% 6% per year in stable markets. In contrast, crypto can yield extreme returns, sometimes 100% plus in bull markets, but it also carries the risk of severe losses. In 2025, cryptocurrencies like Bitcoin and Ethereum are rebounding, while Layer 2 solutions, DeFi tokens, and real-world asset (RWA) platforms are outperforming. Staking, yield farming, and airdrops add to crypto's return potential, with some users earning 8 to 15% APR passively. However, this comes with the price of volatility, regulation risk, and cyber threats. Real estate, on the other hand, benefits from population growth, limited housing supply, and government-backed financing tools. While it may not double your money overnight, it's far less likely to collapse in value. In summary, crypto offers high upside but high volatility. Real estate offers lower upside but strong downside protection. 3. Passive income opportunities. Both asset classes can generate passive income, but the mechanisms differ. In real estate, passive income comes primarily from rental properties, REITs, or crowdfunding platforms like Fundrise and Reltimogul. Rental income provides consistent cash flow, especially in high-demand urban or suburban areas. Maintenance and tenant management can be outsourced, making it semi-passive. REITs, on the other hand, offer dividend yields with no landlord responsibilities. Crypto investors generate passive income via staking, liquidity provision, DeFi lending, and token airdrops. Platforms like Lido, Aave, and EigenLayer offer returns on locked or delegated assets. In 2025, even stablecoins like USDC and DI offer 6 to 10% yields via decentralized platforms. However, smart contract risk, platform hacks, and token inflation can erode returns. 4. Entry barriers and accessibility. When it comes to barrier to entry, crypto is far more accessible. You can start investing in Bitcoin, Ethereum, or DeFi tokens with just $10 using apps like Coinbase, Binance, or MetaMask. Transactions are instant, available 24/7 and borderless. Real estate, on the other hand, often requires significant capital, down payments, credit approval, and closing costs. Even with crowdfunding platforms, minimums usually start at $500, $5,000. Also, real estate transactions can take weeks or months to finalize. Liquidity is another concern. selling a crypto asset takes seconds. Selling a house may take months. However, this easy access in crypto leads to impulsive investing, which can be dangerous. Real estate's high barrier acts as a filter, attracting long-term investors. In short, if you're starting small and want flexibility, crypto is easier to access. 5. Risk and regulation. Risk management is key when comparing these two markets. Real estate is backed by physical assets, making it less susceptible to fraud or total loss. Property insurance, legal protections, and tenant laws add further security. Crypto, however, is still evolving. In 2025, regulation is tightening in the US, Europe, and Asia, leading to greater investor protections, but also more restrictions. Hacks, rug pulls, and smart contract bugs remain threats, though multi-signature wallets, on-chain audits, and insurance protocols are improving. Real estate faces its own risks: market downturns, interest rate spikes, and property damage. But these are more predictable and manageable. Investors in crypto must also contend with tax complexity, especially around staking rewards and NFT trading. 6. Tax implications. Understanding tax implications is crucial. In real estate, investors enjoy benefits like mortgage interest deductions, depreciation, capital gains deferrals, and 1031 exchanges to roll profits into new properties tax-free. Rental income is taxed, but you can offset it with maintenance and operational expenses. In contrast, crypto taxes are complex and often under scrutiny. Selling, staking, earning airdrops, or even swapping one token for another can trigger capital gains or income taxes. In 2025, many countries are moving toward real-time crypto tax reporting, requiring detailed records of every transaction. Platforms like Coinly and CoinTracker help, but tax compliance in crypto can still be overwhelming for active traders. That said, some jurisdictions offer crypto-friendly tax policies, attracting digital nomads and international investors. For tax optimization, real estate is clearly more favorable, especially for long-term investors. 7. Inflation and hedging. In an era of uncertain monetary policy, both crypto and real estate serve as inflation hedges, but they work differently. Real estate is a traditional inflation hedge because rents and property values typically rise with inflation. This protects purchasing power and ensures cash flow grows over time. Additionally, fixed-rate mortgages lock in today's lower costs, while the value of money declines. Crypto, especially Bitcoin, is often called digital gold due to its fixed supply and decentralized nature. In theory, Bitcoin should rise as fiat currencies lose value. In practice, its short-term price is influenced by speculation, global risk sentiment, and regulatory news. Still, during inflationary periods like early 2020s, crypto saw surges in adoption. In 2025, newer inflation-resistant tokens pegged to real-world assets, like tokenized bonds or commodities, offer hybrid protection. Real estate offers stable, proven inflation protection. 8. Which is right for you? So, where should you invest now? Crypto or real estate? The answer depends on your goals, risk tolerance, and capital. If you're a long-term investor who values stability, steady cash flow, and tax advantages, real estate is likely the better choice. It builds wealth gradually and predictably. If you're tech-savvy, comfortable with high risk and volatility, and want access to emerging technologies and global markets, crypto may suit you. Ideally, many investors diversify, allocating, for example, 80% to real estate and 20% to crypto. Real estate anchors your portfolio. Crypto gives it explosive potential. A combination of REITs and crypto staking might even deliver both passive income and growth. In 2025, the smartest investors aren't choosing one over the other. They're leveraging both strategically. Evaluate your own timeline, liquidity needs, and comfort with new tech, then build a balanced portfolio accordingly. But if you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.